What's going on, everybody? Welcome back to another YouTube video. In today's video, we're going to be doing a full breakdown of the ICT silver bullet model. I'm going to be walking you guys through all the components that this model has and actually how to trade this model from a day-to-day basis in order for you guys to get your first ever funded account, your first ever payout, and so on and so forth. But before we even get into the video, I've got a huge announcement to share with you guys. I'm actually opening up a few seats for my one-on-one mentorship program, where I'm looking to take on a few serious traders who are seriously looking to change their lives forever. In this mentorship, you'll receive exclusive one-on-one video calls with me, 24/7 direct access to me as well, so I could personally guide you through every or any challenge you guys are facing. On top of that, I'll also guide you through my profitable and proven trading strategy, how to properly manage risk and strengthen your trading psychology, and develop the mindset and discipline that leads to the real results in the markets. Pretty much, I'm going to be helping and showing you guys a full game plan to your success. Now, together we'll be breaking down your trading approach and seeing what works and what isn't, and then build a tailored plan that is designed for your exact trading situation. We'll also figure out what you could improve on in order to progress to that next level, whether that getting your first funded account, your first ever payout, or even being consistent in the markets. Now, if you're interested and are serious about having a mentor to guide you every step of the way and actually changing your life, all you need to do is fill out the quick application form that is in the description down below, which takes less than 45 seconds. And if you do get approved, we'll speak very shortly. Other than that, guys, let's get back right into the video. All right, so the first thing that I always want to see before even looking for a trade is a sweep of liquidity. And the reason why I'm looking for a sweep of liquidity, whether that being a buy side or a sell side liquidity, is because essentially price moves from liquidity to liquidity. Now, as we can see right here, we do get a sell side liquidity level getting swept. And in this scenario, it was Asia lows. Now, as soon as we swept some sort of sell side liquidity, which was in this case, Asia lows, automatically I'm looking for longs now. As I said before, price is moved by liquidity. So if we sweep sell side liquidity, technically price should move to the upside, and vice versa. If we sweep a buy side liquidity level, price should be coming to the downside. Now, the second thing that I want to be looking for after sweeping that sell side liquidity level, in this case was Asia lows, I want to be looking for a swing high to be created. Now, the reason why I'm looking for a swing high to be created is because step number 3 and step number 4 are related to that swing high being created. So once I've identified this swing high right here, as we can see, it was formed at 1046. Now, the third and fourth thing I'm looking for is a market structure shift and a displacement to occur. So as we can see right here, this 1049 candle actually opens and closes. As we can see, this is the close of the candle. It closes above this swing high right here that is created at 1046. That is just essentially called a market structure shift, where we get a swing high and price goes up and above and closes above this swing high. Simply just a market structure shift. And a displacement is a big impulsive move that helps break that market structure. As we can see, we do get this big candle right here, followed by this candle, which breaks market structure to the upside. This just indicates to me that price is willing to seek higher prices. After that market structure shift and displacement has occurred, now I'm going to be looking for a fair value gap to be created. And usually after a market structure shift and a displacement to the upside, a fair value gap usually occurs. So as you can see right here, we do get a fair value gap at 1048 that is formed from that displacement candle, as well as the market structure shift. So we do get a fair value gap. And essentially what a fair value gap is, it's a 3 candle pattern, where if we look very closely in this bullish example, if we name this candle number 1, and this candle here number 2, and this candle here number 3. Now the top or the highest point of candle number 1 and the lowest point of candle number 3 are not overlapping, and there is a price gap that is just essentially called a fair value gap. Now, why is a fair value gap very important in this scenario and situation? It is important because that's where our entry point is going to be. As soon as price retraces into that fair value gap, as we can see here at 1053, we execute the trade going long. As soon as price retraces into the edge of that fair value gap, we want to be in the trade. We don't want to wait for price to retrace all the way down to the end of the fair value gap right here to get a better entry or fill price. Because if we do, sometimes price just retraces into the edge of that fair value gap and then continues going into your desired direction. So in order not to miss any trades, you want to be putting your entry point just as soon as price retraces into that fair value gap, the edge of that fair value gap. Now, where do we place our stop loss is very important, and it's very technical. We always want to be placing our stop loss below the nearest swing low that we see. And we also don't want to be risking more than 30 handles per trade. So as you can see right here, we place our stop loss below this nearest swing low at 1048, only risking 24 handles or so. And there's obviously a valid reason on why we put our stop loss below the nearest swing low to the left of us. And that reason is because if price is bullish and it really is wanting to push to the upside, it is always going to be creating higher highs and higher lows. So in this scenario right here, we do have a high right here. It creates a high high and then a high high. So price is actually going to the upside, as well as that it's going to be creating higher lows, right? So there's a low, it's going to create a higher low, then a higher low, then a higher low. As you can see, another higher low. So if price does want to actually go up to the upside, I know that if price is willing to actually go to the upside, it's not going to be wanting to take this swing low right here. Now, as we could see, it didn't take this swing low and it kept going higher. Now, step number 8 on our checklist is going to be, where do we take our take profits? Now, as we can see right here, we do have a large drop down that in order to take out these Asia lows that we had previously talked about. When I usually see a massive drop in price or a massive push up in price like that, that is pretty trendy. As you can see, price just moves in one direction. I usually tend to actually get out the Fibonacci tool and measure the top to the bottom of that range. As you can see, this is just called a range. And I want to see where 50% of that range is. Because if we have a massive range like so that we can see right here, price usually tends to retrace to that 50% level right there. So this is where I'm going to be targeting. As well as that, there is an inefficiency right here, a 1 minute fair value gap that price is most likely willing to fill, which it did. So that's going to be obviously my target. 50%, the equilibrium of that whole range. That's where my take profit's going to be. So keep in mind a massive draw on liquidity as well. If you have a massive drop like this that we see right now, a great take profit margin point will be measuring from the top to the bottom of that range, finding out where 50% of the range is, which is called the equilibrium, and targeting that equilibrium point. And as you can see right here, price hits our take profit for approximately 50 handles on the day. Now, I also do want to mention to you guys that our entry point was obviously inside of the second AM macro from 10:45 to 11:15. This is very crucial to have our entry point inside of the first AM macro or the second AM macro, wherever we get our entry point. But it has to be in that 30-minute interval, as price tends to actually have a better chance of making a run towards these key levels, such as the equilibrium level that we have right here. Now, I do be getting a lot of messages and questions about if we get a setup that forms outside of the macro. So let's say this setup right here, we get this market structure shift and displacement formed outside the macro, and then we get a fair value gap also formed outside of this macro, but then we get a retracement inside of the macro. That is an absolute valid trade. As long as our entry and execution point is inside of that first or second AM macro, that is a valid trade to take. We don't have to have the whole thing and whole scenario happen inside of that 30-minute interval. We could absolutely get the sweep of liquidity in the first AM macro, even not get a trade in the first AM macro, and then get this whole thing happening inside or outside the second AM macro, then get the retracement inside the second AM macro. Absolutely fine, absolutely valid. So the main takeaway is your execution must be inside the first or second AM macro. So there you have it, guys, the ICT silver bullet model, full breakdown for you guys to use every single day in the markets. Make sure to apply your risk very, very well. Don't over leverage, don't over trade, don't be revenge trading in the markets. Now, before you guys go anywhere, I do have a VIP top trading floor Discord server where I do provide my entries and take profits, my stop loss placements, all of that right in front of you guys. I give out live signals. So if you guys are willing to join the Discord server, the link will be in the description down below. As well as that, I do provide heaps and heaps of supports for you guys. I've got heaps of resources in here, guys, to help you out, such as like a psychology page, a heaps of trade ideas, rate setups. People be putting questions and setups in those channels and I'll be responding to them. As well as that, a whole top trading floor Discord chat where you guys could absolutely chat between yourselves with like-minded traders. And I'm obviously inside of these chats answering questions on a daily basis. As well as that, I do share with you guys trade recaps, which I actually do have a Telegram right now, where I'll put the link in the description down below. I have a Telegram where I have it specifically for those daily trade recaps. All videos and all pictures will be posted on there, just because it's very hard to actually get them on Discord. It takes ages for me, I don't know why, but the link will be in the description down below for that Telegram where you guys could join. Absolutely for free, by the way. The Telegram was absolutely for free. See which trades I take and why I take them, and see why and the reasoning behind every single trade I take, my thought process as well. So if you guys are willing to see and watch my trade recaps for absolutely free on the Telegram, the link will be in the description down below. I absolutely appreciate and love each and every one of you guys. Thank you guys for watching and tuning in, and I'll be seeing you guys in the next one. Peace.